Evening, everybody. Sorry about that. I just want to make sure before we start the webinar that everyone can see my screen, which is JobKeeper extension 2.0. Can I have someone type in Q&A, please, that they can see? That would be great. Yep, okay, cool. Thank you for confirming, guys. Thank you very much. Thank you very much for coming on at a late hour. I tried to make it as early as I could, but also I know there's a lot of people who are, you know, working hard and all that sort of stuff. So I wanted to give everyone as much as possible a chance to come on. I'm actually going to do this webinar in two parts. The first part is I'm going to cover JobKeeper extension 2.0, and I'll give an intro to that in a second. And the second part is probably more important in the scheme of things, given there's a timing relevance to it, and that is maximising the write-off of assets with the rules that exist for equipment, etc., but also cars. I really want to highlight and go through cars in detail as well. So I'm going to be stopping. The first PowerPoint presentation is just on JobKeeper, then I'm going to stop that and I'm going to do a separate PowerPoint totally on assets and maximising your assets. So I'm going to get underway. With JobKeeper extension 2.0, basically what this is just a summary that we've put together reasonably quickly of what the government's come out and said. The finer details have not come out, and so we'll have to wait longer for that. But given JobKeeper 2.0 doesn't start until virtually at the end of September, we've got a bit of time to sort that out. But I just wanted to give everyone at least some semblance of what the rules are going to be so they can get their head around it over the next couple of months. But I'm also kind of hoping that the majority of people out there, unless you're in Victoria with us, where we're not going too good at the minute with COVID and everything else, and who knows, we might end up being in lockdown stage 4. I don't know, I hope not, but the numbers are not coming down. But anyway, I don't want to dwell on that, but I'm hoping that majority of people out there won't need JobKeeper 2.0. And I think by the time I get through the presentation, you'll understand why that is the case. But I just want to go through it anyway, so you've got some parameters, and I'm going to go through it fairly quickly, but you're going to get a video of this, of the whole presentation, so that worst case scenario, you can stop, pause, rewind, and listen to the bits that matter more to you than anything else. So, oops, hang on, it didn't work. Okay, JobKeeper extension. You guys would all probably know this, so I am going to cover some stuff you already know, but it's at least that you've got something to refer back to. They're extending the JobKeeper by a further 6 months until the 28th of March next year. And they've come out and said they're targeting businesses, including self-employed people by themselves, who are still significantly affected at the end of the JobKeeper 1, which is, as I said, runs out late September. It's going to be purely targeted by people still affected at the end of that time. Now, however, the rates are going to be reduced and the rules are slightly different with hours, but otherwise the majority of the JobKeeper rules have not been changed from the first JobKeeper. The main difference is the payment rate of $1,500 a fortnight is going to be reduced to $1,200 a fortnight, basically for the October to December period, and then it drops to $1,000 per fortnight, basically for the first quarter of next year. And also from the 28th of September, there's going to be lower payment rates for employees and people, business owners who have worked less than 20 hours a week. I'm going to cover all this in a little bit more detail. I'm going to, if there's any questions, I would prefer you to jot them down or put them in the Q&A box, and I'll cover them when I get through JobKeeper. I'll cover all the questions for JobKeeper at the end, if that's okay. Okay. From 28th of September, JobKeeper, to be able to get JobKeeper, you've got to be able to demonstrate you've suffered still significant decline in your turnover. It's going to be on actual turnover, not projected turnover. So at the end of September, all businesses will be required to re-look at and reassess their eligibility in reference to actual turnover for the June quarter. So in other words, April 20 to June 20, and the September quarter, 1 July to 30 September. And they'll need to be able to demonstrate that they meet the relevant decline in turnover test for both of those quarters to be able to get JobKeeper for the October to December period this year. Oh, sorry, that says 21, but it's actually, oh no, it's the 3rd of January. Yeah. Okay. And from the 4th of January, you'll need to further reassess your turnover to be eligible for JobKeeper for the first quarter of next year. So to be able to get it in the first quarter of next year, you'll have to look at your actual turnover for the June, September and December quarters to remain eligible still. So basically, to be eligible for JobKeeper under 2.0, you'll need to be able to demonstrate that you've still had the 30% drop in turnover that applies now, but you're going to have to be able to demonstrate it for the June quarter, September quarter and December quarter to be eligible. Now, understand something. If you fail to meet those tests, it doesn't mean you still get JobKeeper all the way through to when it runs out, which is the end of September. So if you don't meet the 30% drop, and we're going to cover an example in a minute, if you don't meet the 30% drop, don't panic, and you were eligible at some stage for JobKeeper from 1 April because you dropped 30%, then don't stress, you're going to be eligible all the way through to the end of September, which still is good. And they're saying that it remains open to new recipients, provided they meet all eligibility requirements, and everything else remains unchanged. So from 28 September to 3 January, this is obviously part 1 of the 2-part extension. As I've already said, it goes to $1,200 a fortnight for all eligible employees, and this is the important part, who in the 4 weeks of pay before 1st of March were working in the business for 20 hours or more on average a week. Now, I'll pause for a second. You guys would know now that everyone's getting $1,500 as long as there was no hourly requirement. They just had to be permanent part-time, full-time, or a casual on a systematic and regular work pattern for 12 months, at least 12 months prior, and they were getting paid their $1,500. The difference here is to get the $1,200 a fortnight in the last quarter of this year, you need to have been working at least 20 hours in your business on average in the 4 weeks prior to the start of March. And the same goes if you're a business participant. So in other words, if you don't have employees and you know how you're able to nominate yourself to receive JobKeeper, you still have to be actively engaged in the business for 20 hours or more a week as well. Now, $750 a fortnight is for those who don't meet that. So in other words, they work less than 20 hours a week. They're eligible for $750 a fortnight instead. So, do you want to ask something?
Yeah, I did.
Sorry, Anita's here as well. I should have introduced.
Hi, guys.
She's not saying much, but she...
But I'm going to ask a question. I know Adrian asked to save them till the end, but I don't even know who's going to know the answer. But for eligible business participants, how do you actually prove you're not getting an income that you were actively working?
I think it's going to be a common sense approach, meaning if you're, well, yeah, I don't know how they're going to do it, but I mean, for pay, obviously for employees, it's easy. It's on pay slips and hours and all that sort of stuff. But if you're, I think they'll be hard pressed to knock you back on that if you're ineligible, unless your income, because don't forget, this is when you were still generating an income. Yeah. This is in the period prior to everything being shut down. So if you're generating a certain amount of income and you don't have employees, I think it's going to be pretty easy to be able to say to them, hey, look at the income I'm generating. I'm actually working 20 hours easy. You can see that pretty comfortably. But
so
yeah,
it is something you probably need to consult with your accountant on.
Yes, yes.
Because it's a little bit grey. There's no like pay slips.
But I think there'll be some bit more common sense involved with that. But yes, I would, if you're eligible, I would speak to us or your accountant. So part 2 of the JobKeeper extension runs from 4th of Jan to 28th of March. And as I've already discussed, that drops to $1,000 a fortnight. Once again, you've got to meet that test that I just covered, that you were working at least 20 hours a week per average for the 4 weeks prior to the 1st of March. And if you're an eligible business participant, that you were still doing your 20 hours. And for those who don't meet the 20-hour test, it drops to $6.50 a fortnight. Now, the businesses will be required to nominate which payment rate they're claiming for each of their eligible employees or business participants. And it says here, as always, the ATO, well, no, that's all that is it 1,000 or is it 650?
Okay.
You'll know that pretty easy. Or if you go back, 1,200 or 750. I think those things are not going to be hard to work out.
Yep.
But because remember how JobKeeper works, you've got to pay it to get it back at the end of the month. So you are effectively going to have to that's why they're using things back in February. So they'll be, oh yeah, that's that. Okay, if I qualify, which I'm going to cover that in a minute, then you've just got to make sure you pay during the JobKeeper fortnights, the 1,200 a fortnight minimum and the 750 a fortnight minimum, or the 1,000 a fortnight minimum, the 650 a fortnight minimum, because you've got to pay it in advance to get reimbursed at the end of the month. And as you guys would know, if you're on JobKeeper already, you've got to do a declaration at the end of each month or they don't pay you anyway. So that'll just be a reconfirming that anyway. And they've said there that, love to see how this comes out, that the ATO basically have discretion to set out alternative tests where the business participants' hours were not usual during the February 20 period.
Well,
So,
we've got cases
e.g. volunteering during bushfires, someone's on leave, Anyway, I'm not going to get caught up on that.
Once again, get help.
Guidance. No, doesn't really matter about that. As I said, you've got to make sure you pay at least, like now, the 1,500. You've got to make sure you make the minimum repayments as required by those, depending on which bracket you fall into. You've got to make sure you pay the minimum repayments. You can pay above that, but you've got to make sure you at least pay that minimum for anyone that's getting JobKeeper who's eligible. Now, in order to be eligible for JobKeeper at the end of 27 September, which is the end of the JobKeeper 1, businesses will have to meet a further decline in turnover test for each of the 2 periods, as well as all other existing requirements which exist at the moment. So what that's saying is you'll need to be able to demonstrate that your actual GST turnover has significantly fallen in both the June quarter, which is April, May and June, and the September quarter, July, August and September, relative to the same corresponding quarter a year before. So it's not going to be hard to know if you qualify, because, but having said that, oh no, that's right, because they're looking at the June and September. Remember, this doesn't kick in. You don't start paying this effectively till the start of October or really, really late September. So you are going to be able to use your actual figures as long as you're on top of your bookkeeping.
Yeah, I was going to say,
so that
you're going
there's
to have everything done by the start of October.
more pressure on the bookkeeper again, because that means that to be able to know your June quarter is easy, but to know your September quarter, you're going to have your September 20 quarter figures done ASAP, or at least have them up to date right near the end, so you can at least go, okay, how's my June quarter 20 versus June quarter 19? And how's my September quarter 20 to my September quarter 19 to know if you meet the 30% test? Because remember, you've got to meet it in both periods to qualify. Remember, I covered that a bit earlier. And in order to be eligible for the part 2 of the extension, you've got to do it again for June, September and December. So in other words, to get, which I've already covered, when you get towards the end of December, like in September, you're going to have to be all over your numbers again, because your June will be easy, your September will be easy, but right near the end, December, you're going to need to be all over December so that you can compare a year ago for the 3 quarters and make sure you still meet the 30% or more to qualify for the next quarter. So I know they're being a little bit harsh, probably a little bit unrealistic. It'd be great if they gave you an extra week or something after the end of the month or end of the quarter to know what your actual is, but it just means you're going to have everything keyed in. So when you get close to the end of the month, the end of the quarter, you'll probably have a pretty good feel of how it goes compared to last year anyway.
Can I say something there? I mean, it's a little bit like the same as what we're doing with JobKeeper every month anyway, because you have to know your income. You got to give them your actual income and your predicted income.
Yeah, but the predicted income has no relevance.
No. But what I'm saying is they ask for your actual for whatever the month is. This is what that's going to be. You're going to be focusing on your income.
There's a big difference though. The actual income for the JobKeeper has no relevance either. The only time the actual, so let's say I'm claiming JobKeeper for July, and at the end of July, I've got to do my declaration to get paid at the start of August. On that declaration, you've got to give the actual July turnover and anticipated August turnover. Neither of those figures have any relevance at all. The only time it does is in the month that you're down for the first time that you're qualifying. That has to be your 30% or under. So the big difference is, if you want to keep getting these things, you've got to make sure, if you want the first extension from October to December, you've got to be 30% or more down for your June quarter and September quarter. And if you want the one from January to March, you've got to be 30% or more down for June, September and December quarters. So what it does mean is you're going to have to be, towards the end of those quarters, you're going to have to, if it's close, you're going to have to be all over this. I think
what I'm saying is going to be all over your income.
Yeah, it doesn't matter about the expenses, and the income's not so hard to get on top of.
Yeah.
It's the assets and expenses that get out of control with reconciling and documents. The income, I don't think, will be too hard to actually reconcile and get on top of. So, sorry. I've already done that. What did I do? Now, businesses, it mentions not-for-profits, but I'm not mentioning not-for-profits, is you're looking at your BAS figures. Because remember, the income that you're putting in here is your GST income. So if you're on cash for GST, you use your cash income figures. If you're on accruals for GST, you use your accruals figures. I'm not going to worry about that. Okay, employees, eligibility for employees. Hasn't really changed, but I'll go over it really quickly. You are currently employed by an eligible employer, including if you were stood down or rehired. You either worked full-time, part-time, or a fixed-term employee at 1st of March, or a long-term casual on a regular and systematic basis as at the 1st of March, but not a permanent employee of another employer, and you're 18 years old or more at the 1st of March. You're either an Australian resident or social security purposes, or an Australian resident for tax purposes at the 1st of March, and you're not in receipt of either parental leave or workers' compensation, which is interesting. Now, as previously, only one employer can claim JobKeeper in respect of an employee, and you know how, if the beauty of it is, if you're continuing on and you've got the same people, you don't need any more declarations or anything at all. It's just assessing whether you're eligible and making sure you pay the minimum repayments for those periods that because you've got to pay it in advance. Now,
that's our dog coffee.
I'm going to go through an example of retesting under the JobKeeper extension. I'm going to go through this because this is really important. They give an example here. Carmen owns a cafe and she started claiming JobKeeper for her staff and commenced at the end of March. At the time, Carmen estimated projected turnover should be 70% below its actual, and she's claiming JobKeeper, and she needed to be able to show that her business dropped 30%. Okay, obviously she was eligible for JobKeeper 1. That's not a problem. What they do now is, this is actual figures. So they give April 20, May and June gives total income for 20 of 170 grand. Income the quarter the year before was 600. She's down 72%. Tick the box on 30%, no problems. Next example, actual turnover for the 3 months, July, August and September is 400 grand. A year before it was 600 grand, 33% down. Tick the box. So what that means is, because she was down for June and September quarters by more than 30%, she's eligible for JobKeeper Part 2A, I'll call it, which is from 28th of September to the 3rd of January, which means for October, November and December, she's got to make the minimum requirements based on the new rules, and then she'll get reimbursed at the end of each month after she does her declaration. Now, they go on to say the business continued to improve and the actual turnover for December was 20% down the year before. So the cafe was no longer eligible at the end of December. So I think you can see that it's reasonably straightforward to work out The key really is, if you want to be eligible for Part 2A, you've got to be down by 30% or more for June and September. If you want to be eligible for Part 2B, which is for January to March, you've got to be down for June, September and December by more than 30%.
They do give you a little bit of flexibility there.
Yes, based on the current rules, they give you a little bit of leeway, but to be slightly out if an estimate's required here or there. But remember, this is more actual now. So I think they're going to be, in our other rules, there was an ability to project a little bit. I think, given how easy it is for income to be reconciled, I don't think there'll be a lot of leeway here. Now, in that example, they go through, Carmen was working full-time throughout February. So she's able to claim $1,200 a fortnight for the 3 months, which is the maximum amount. She has 3 full-time employees who are also eligible for the $1,200 a fortnight. And there's other people who, because of their hours, are only eligible for $750 a fortnight because they weren't doing their 20 hours. So I think that all makes a lot of sense. I'm not going to go read all through that. I think you'll find that based on what I've already covered, that will be reasonably self-explanatory. Now, any questions on JobKeeper 2.0? I wanted to go through it really, really quickly because A, everyone's going to get a copy of it and they can slow it down at their leisure. And B, I'm kind of hoping that most people won't need this.
We've got a few of our clients that have been hit hard.
But yeah, we've got a few guys that have been hit really hard, but I still think might still find it hard to meet this based on the criteria. But that's why I wanted to cover it. And if more details emerge over the next 2 months, we'll obviously do another webinar, but that's the guts of it now until more details come out. But we don't need to stress because we've got 2 months.